Welcome to our weekly Forex market analysis call, and this is in preparation for trading for the week of October 29th to November the 2nd, 2018. Just a quick disclaimer before we get started here. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start by taking a look at our Forex Factory calendar here. And you can use any calendar. I'm just used to looking at Forex Factory. You can choose to look at the calendar that your broker may provide. It's all the same. That is totally fine. So we'll take a look at the calendar for the entire week here. Starting off, we don't have anything critical on Monday. We do have net lending here, personal spending, core PC. So orange news, but nothing that is red, and we don't see that till Tuesday. So we have consumer confidence numbers out of the US. These numbers are always important. So they will have an impact on US dollar. Bank of Canada, Governor Pola speaking. So Bank of Canada raised their rates, and now there would be these questions about, are we going to see more interest rate hikes from Bank of Canada and whatnot? So any of those, any comments in regards to future rate decisions, etc., if any of those come out in this speech, that will have an impact on Canadian dollar. But just to comment on Bank of Canada interest rate hike here. So what Bank of Canada did was they raised rates, but then they had negative commentary and they actually lowered the forecast, the growth forecast for 2019 and 2020. So it was almost like a dovish interest rate hike where the interest rates went up. And normally when interest rates go up, it's good for the currency. But that's why I always talk about how we have to pay attention to the comments that come out in the conference, because the comments essentially said that the future prospects are not that good. They are concerned about future prospects. That's what ECB did as well. Of course, they did not raise rates because that was not expected. They have already said that they will not be raising rates till summer of 2019. But their commentary was very similar. They have dropped the growth prospects for 2019 and 2020 as well. So overall, central banks seem to be concerned going forward. So just kind of keep that in mind. The comments make a big difference as to what the price will do for the currency. And then we have CPI numbers. These are the inflation numbers. Again, one of the key numbers that the central banks will look at. So if the CPI numbers come in positive here, that would be good for Australia, Australian dollar. But if they're negative, that can push Australian dollar lower. And then we have another central bank here, monetary policy statement from Bank of Japan here. Bank of Japan, negative interest rates. They've kind of kept the monetary policy pretty much expansionary forever and not looking to change that right now. But again, commentary that comes out will be very important. So if they talk about the future prospects to be lower or they're concerned about it, that will be negative for Japanese yen, and we could see Japanese yen crosses go up as a result. So again, monetary policy statement, when that comes out, it will have an impact, and then there will be another impact when the press conference happens, because the reporters get a chance to ask questions and the commentary there can have an impact. And on Wednesday here, we had GDP numbers for Canada here. We also have ADP non-farm employment numbers. So these numbers are important, but of course the non-farm payroll numbers are more important. But they're kind of a precursor to non-farm payroll. That's why they are important. GDP numbers, again, very important, especially because Bank of Canada commented on growth prospects. So GDP numbers will be important. We have Swiss National Bank Chairman Jordan speaking. Anytime there are central bankers, we have to pay attention. Then we have Bank of Canada. So the more speeches there are from the same person, the less the impact of those speeches. So keep that in mind. And then on Thursday, we have another central bank here, but prior to that, manufacturing PMI numbers. But we have Bank of England here and inflation report, and we have the votes here as well as the official bank rate here. So not looking for an interest rate hike at this point, but again, the commentary will make a difference. And then we have the press conference here. So usually we will see one either a hike, or we'll see a reaction, I should say, on that currency based on what comes out here, and then second reaction when we see the press conference. So two central banks there, very important. So it looks like a volatile week this week here. We have manufacturing PMI numbers for the US that will have an impact on the US dollar, and then we have New Zealand business confidence numbers. Again, will have an impact on New Zealand dollar, and retail sales numbers for Australia. Friday, very important day here. Again, we have employment numbers for Canada. The most important thing, however, will be the non-farm payroll report. So non-farm payroll report is one of the highest volatility news reports that come out. So usually we tend to see a big reaction based on non-farm payroll. So it always has a reaction on the market. So we have to be mindful of that. So tons of red news coming out here this week, starting Tuesday here, and it gets heavier as the week progresses. So expect volatility in the market. All right, so let's take a look at our charts here, and we'll start out with the dollar index first, and then we'll take a look at US dollar crosses. So for dollar index, what we have seen is that price is coming into the resistance here on Friday. It pulled back, and let's go to our candlestick chart here. So based on the weekly here, this week we saw that price has gone up. It's bullish. It was trading in this range for last 3 weeks. Now this week it went up. We are into a resistance now. So that is something we need to keep in mind, which means price can turn around. We are almost into this previous pin bar here. So we have to be careful. So US dollar was very bullish throughout the week, except for Friday there. And now we could see things turning around. So right now, this is still bullish, but I would be cautious because we are coming into resistance right there. That's important resistance. But so the bias will be bullish, but with caution. So let's go on to the charts here. Euro dollar here, we saw a big drop in euro dollar, and this is looking bearish still. So target will be 1.1300 here. And now because as we looked at the dollar index there, we see that price could turn around. Sorry, 1 second. Okay, so because we are right into that, into the dollar index there. So dollar index shows that things could turn around, and euro is showing the opposite of that. So this is bearish. There is room to the downside, but now we are getting close to that support level. So we could see things turning around. So this is what I would look for, looking for price to drop further, maybe test the low here, and then potentially turn around here as the dollar index turns as well. So bias for euro dollar is bearish, but we are coming close to support. So caution will be very important. So we have to keep an eye and look out for those reversals or pullbacks. Pound dollar here. Overall, we have seen a big drop. We had a nice bearish pin bar the other week, so we have seen a nice drop. This looks bearish, looking for price to potentially go lower into 1.2650. And it goes without saying for all these crosses, because the dollar index may turn around, and these will turn around as well. But I'm looking for a further move to the downside here, potentially a pullback into 1.30. but looking for price to drop all the way into 1.2650. But again, keep an eye on that dollar index. So bias is bearish for pound dollar here. Aussie dollar, we have seen, this one was interesting. We saw a drop and then price pulled back from there. So with this one here, there is still bearishness in this candle, but it is not as bad as euro dollar or pound dollar were. But because there is bearishness, it could go do a retest before it turns around. So I would look for maybe a retest on this one, but overall, there is bearishness, but we are so close to the support here. I will look for a retest of the support and then a potential turn, and looking for price to potentially go up higher. We are into this support turning into resistance at 0.7150-ish level. So bias here is to the downside, but then I'm looking for a turn there. New Zealand dollar here. Take a look at the weekly. So this one was, New Zealand dollar was a little bit weaker than Australian dollar. And we see a weekly candle close that is bearish. So I will look for price to maybe test the bottom once again at 0.6420 level. So I'm looking for price to drop further. But like I mentioned, with all the dollar crosses, we have to look out for price to turn this week. Canadian dollar was interesting because Bank of Canada did an interest rate hike, which pushed the dollar CAD down. So what we see here is a doji price opened and closed at exactly the same level that it started off at. So this one overall bias here is still bullish here, because as we see, we have higher highs and higher lows as well, which suggests that price can go higher here. So first we have to see a break of this. So it could do a pullback before it starts to go up, but the target here would be 1.3230, but we have to wait for price to break through before it continues on. So right now, overall, this it's neutral. The weekly candle close is neutral, but overall, the bias is bullish for dollar CAD. Euro pound here. Euro pound was bullish this week. We had this couple of these bullish pins here. So bullish move in euro dollar. We have a nice solid bullish candle close. So this one can go up further, looking for price to go into 0.90, which is the top of these candles. So bias is bullish for euro pound. Euro Swiss franc here. Bias is bearish. We saw a drop here, and as a result, looking for price to follow through, or looking for a follow through in price here, and looking for it to drop more. 1.1250 will be the target to the downside, which is the base of this candle. So that's a nice bearish engulfing candle here, looking for price to drop further, but do watch out for those pullbacks before we see continuation. Pound Swiss franc here, this one is looking bearish. Now with the Swiss franc here, keep in mind we do have central bankers speaking, but based on the candle closes here, this is looking bearish. So looking for price to drop further here for pound Swiss franc, we could get a pullback here and then a further drop. So my target would be 1.2520 level. So bearish bias for pound Swiss franc. Dollar Swiss franc here, US dollar was actually strong, and that's why we saw this go up, and we had a nice weekly bullish candle close here as well. Now this week, I think we could see dollar reverse. So as a result of that, we could have, we could see a turnaround here. So I would look for a retest of the high and then a drop. So basically I'm looking for price to push up, do another push to the upside, and then potentially drop from there. So looking for price to come back down. So this pin on top here suggests that we may see some reversals here. So I will look for price to go to push up higher and then turn around here. So in this case, my bias would be to the downside. and I'm looking for price to drop. So looking for price to test the high and then come back down. And the target here would be 9,900, so 0.9900 bearish bias. Well, first push up and then a drop for dollar Swiss franc. Pound yen, this one took quite a beating here. All the Japanese yen crosses dropped last week, and now this is looking bearish still. So looking for price to drop further here. Bias will be to the downside. Next target would be 139.90 there. So bearish bias for pound yen. Now, do keep an eye on the equity markets. If we see equity markets rallying again, that usually creates an opposite impact on Japanese yen because it is a safe haven currency. So when the stock markets tumble, Japanese yen tends to do better, and that's why we saw the big drop here. But the stock markets will not keep on dropping every single day. So as the markets recover, keep an eye on yen crosses because they can start to pull back as well. But based on just the technicals here, pound yen is looking bearish. Euro yen here, big drop in euro yen, so a bearish candle close. I will look for a further drop here and looking for a continuation trade, but again, look for pullbacks before we see drops. And again, like I said, for Japanese, all the yen crosses, keep an eye on our stock markets to see how they're faring. But the bias is bearish here. 125.80 will be the target to the downside for yen, euro yen. Dollar yen here, this one closed lower as well. I will look for price to drop further here. Again, we could see pullbacks and then drop 110.80 or potentially 110.40. So those are the targets to the downside. So looking for a bearish move here for dollar yen. And what we see here is this type of a move. So lower high, looking for a continuation to the downside. So bearish bias for dollar yen. Aussie yen here, this one was bearish as well, but it's still sitting in that range. It did come to test the lows here, and then it went higher from there. So overall bias is still bearish, but I think we could again get stuck here. So if the price moves lower, if the price is able to break to the downside, only then would I be looking for a continuation into 77.50. But I think it could get stuck here. If Aussie starts to move up, Aussie yen could follow as well. But based on the technicals here, my bias is to the downside. First will be a retest of the low again. And if it breaks the low, only then will I look for 77.50. But bias is bearish for Aussie yen. All right, so let's take a look at commodities here. So we have oil. Oil is interesting because we saw price drop, this nice ladder kind of drop here, and now it's pulling back. And looking at the daily here, prices closed right into the high here, which means there is more room for pullback. So overall, from weekly perspective, the bias is to the downside, but I think this one could pull back further. So just looking at the daily, again, it could either pull back into the 68.60 level or all the way into the 69.90, so about $70 level. So I would look for a price to push up and then drop, or either way, basically bias is still bearish, but there is room for price to move up higher. So keep that in mind, but overall bias is bearish, and I will look for price to potentially test the low once again. And let's take a look at our gold here. Gold has been interesting as well. We did see last week we had a bullish bias on this, so price went up slightly higher than the pin here into the next level of support and resistance. So now we have this indecision candle. So the overall bias is still bullish, but we have this pin on top, which means it's getting weaker. The momentum is not quite there. This week, we are seeing a lot of that in different crosses here. So we did see strong trend this previous week, but this coming week, that trend may be coming to an end. Either we are likely to see pullbacks or we could see reversals. So keep that in mind as we are trading this week, and we have central banks monetary policy statements as well. So the week may not be smooth. So it may change, the prices may change direction. So be mindful of that. So with this one, overall bias is still to the upside. So I would look for a retest of the high at 1243.50, but it could turn around from there. So that would be my concern. So we'll call the bias to be bullish to neutral, which means we could get a move like this. And Aussie will tend to kind of line up with this as well. So you can keep an eye on that as well. Copper here, copper dropped a bit. So it has a bit of a downtrend here. So weekly candle here was bearish, but it's still trading in that range. It hasn't quite broken out of it. So it went to test the low, has pulled back from there. So we're seeing these pins on pretty much all the pairs and commodities here, which means that bias here is still to the downside. So I'm looking for price to retest the low first, and only if it breaks through. So this is the first scenario that could happen, so that price goes back to trade in the range. Second scenario is price breaks down, and then we see this continuation move to the downside. But there is this big inefficient candle that could get filled, which means there is room to the downside still. But I'm not, at this point, we can't say for sure if it's ready to fill that candle just yet, because it could just turn around here and then start trading in this range and do one of these, right? So that's quite possible as well. So bias is bearish, but I'd be mindful of the support at 2.69 level there. All right, so silver, let's take a look at what silver is doing. Silver here has been trading in a range, very neutral candle close, and we have pins on both sides, small candle body, very, very neutral candle close. This one, the bias will be neutral. This one can go in either direction. And the best way to potentially trade this would be if price goes into the high, there could be an opportunity to short it because it may get pushed down from there. If it goes into the bottom, it could reverse from there. But bias is completely neutral on that one. Bitcoin has been trading in this very, very narrow range. So better to take a look at the daily here. It's coiling. And when prices consolidate so tightly, we generally see a big move. Now, what we don't know is what direction the move will be. It can just drop or it can push up very strongly. So we'll have to see a break of this tight consolidation before we can pick a direction on this. But the longer it consolidates, the bigger the move will be. It's kind of like the spring really tightening, and then it just blows up, right? So this one is neutral at this point. It's consolidating, which means we are coming up to a move very soon. All right, any questions? That's all I have here. Okay, no questions, so we will call it a wrap. You guys have a wonderful rest of the weekend, and I will see you next time then. You're welcome, everyone. Bye for now.